Okay, so like I was saying, we're talking about the importance of the different Fibonacci levels, right? Let's take it one after the other, and this applies to an uptrend. So let's start with the 38.2 level. Now, right, whenever the market gets to the 38.2 level in an uptrend, it gives a false breakout like it wants to continue buying. It gives a false breakout like it wants to continue buying. And would actually make a little bit of buy move. It would actually make a little bit of buy move, let's do first. It will actually make a little bit of buy move. But note, it's not always the best buy area. But note, it's not always the best buy area. But note, it's not always the best buy area. Especially if you're looking at an H4 time frame. Did you get that? Especially if that's at a even though market 0.2, right? But down to 61.8. 61.8. What we're trying to say, let me quickly explain what you just wrote, is that in an uptrend, remember that you are not supposed to use Fibonacci until the market starts to pull back. The essence of Fibonacci is to be able to join the impulsive move. So at that point in an uptrend where the market is selling, that's the pullback. It will get to a level or a zone. That zone is most likely going to be around 38.2. It will suddenly start buying. So it will give you the assumption that, oh, the market has wants to start an impulsive move, is no longer selling. Meanwhile, it's just deceiving you. It can just do like one buy candle and sometimes even two buy candle, and all of a sudden, when you least expect, it will just reverse and continue selling because it has not gotten to 61.8. Do you understand? That's what I'm trying to explain in that place. So if you understand my explanation, drop a 1 on the chat box very quickly. Drop a 1 on the chat box very quickly. Please, let's be very fast. If you understand the explanation, drop a 1. Good. So except, and that's why I said, especially if you are using Fibonacci on this 4 hours, most of us want to go and enter 4 hours. So if you're dragging that, avoid entering 31.8 on 4 hours. Weekly charts. Remember I told you as time goes on, you really or H4 and be analyzing. You can start analyzing from weekly. That 38.2 you see on weekly would still fly. Do you understand? Because you're looking at a weekly time frame. So it's going to cover an area. That one is what trading compared to the one you see on H4. Do you get? So let's go to the 50 Fibonacci level. The 50 Fibonacci level is another strong area. In the market. The 50 Fibonacci level is another strong area in the market. And sometimes market might not pull back to the 61.8. Sometimes market might not pull back to the 61.8. Market might not pull back to the 61.8. So if you get an entry around the 50 Fib level, is not a bad area for an entry. It's not a bad area for an entry. Full stop. So what do I mean? Sometimes, let's say The market already got to 61.8 and started pulling back. I'm trying to explain now. And then by the time you came, the market has gotten to the 50 Fibonacci level. It's still within the zone where you can still join that buy continuation. That's what we're trying to say. Do you get? Sometimes it might not touch 61.8 precisely. It can even touch between 50 and 61.8, the zone between them. If it's a normal currency price, most of the time, the pips between the 50 level and 61.8 might not even be more than 30 pips at most. It's only in pips like currencies and commodities like gold that might be a little bit wide because of how the pips is calculated. Do you get? So even if you get an entry around 50 to join the move, is not bad. That's the importance of that 50 level. Now for 61.8, right? 61.8 level. If you get your confirmation candle for a buy closing above the 61.8 level, if you get your confirmation candle closing above the 61.8 zone, it's always a good area to join the buy move. It's always a good area to join the buy move. It's always a good area to join the buy move. Are you there? But note, if your candle closes below the 61.8, now there's a trick there now. If your candle closes below the 61.8 level, if your candle closes below the 61.8 level, preferably exit the buy. Exit the buy. Exit the buy. And join the sell move. Join the sell move. Join the sell move down to the 100%. Join the sell move down to the 100%. As your zone might likely would have been broken. Your zone will most likely have been broken. Then you're done writing. Now look up. Are we all there?
Coach, please repeat the last thing you said.
Where did you stop? What was the last thing you wrote so I know what I'm... Oh yeah, now answer. What was the last thing you wrote? It's just
Okay,
kind of...
the last thing I wrote was sell move.
I didn't get you.
I said exit and join the sell move.
Okay, exit. Yeah, that was the last. That was where we stopped now. Exit and join the sell move as your trend. Okay, would most likely have been broken. Do you get that now? Then your trend would most likely have been broken. So join the sell. So the 100%, 100% Fib level. Full stop. Are you there? Can I go on? Oh yeah, let's respond, please.
Yeah.
Okay, so this is the
Yes,
illustration.
yes.
Okay, so this is the illustration we're using. Let's assume this particular zone here is our 61.8, just for the sake of practice. So this was the last buy move that went up. I now drag Fib, and this zone was where 61.8 drops. And I marked it out, and I looked to my left. It was a swing point. I was waiting to buy here, right? So what I'll be doing is waiting for the market to do a pullback. So that's 61.8 to buy, right? That's what we thought was now that the previous swing points is where we buy. So I also drag Fib in now also coincidentally 61.8. I'm waiting to buy it. So while I'm waiting, of course, the market will need to sell down into that zone for me to join the buy. True or false? True. So when the market gets to that zone, I want to see a buy candle that tells me it's time to buy. But for one reason or the other, instead of seeing the buy candle, this selling pressure that came into this zone was so strong that the last sell candle that closed, instead of closing above the zone, closed below the zone. Even naturally, even if you did not understand Fibonacci, you wanted to buy in this zone and a selling pressure candle close below, you automatically know that that zone has been broken. Because in most cases, remember your stop loss, if you were buying, would have been below that zone, meaning most likely it would have hit you out. Is it not? So the moment you see that, don't force the buyer and start saying, oh, because this is zone, I want to join. No. As the market is changing, you to follow in the direction. That's why when you trade the market, your goal is not to predict. Your goal is to observe what the market is telling you based on the price action and the market structure. And you also move. If it's moving up and it says I'm no longer moving up, quickly follow. So when the sellers get into this zone, if they close above that 61.8 zone, meaning if a buy candle closes above, or that last sell candle that came there closed with a wick that is below the zone and the candle closes on top, I would buy, because it's telling me that buyers want to take over. But for one reason or the other, it now closes below that zone, which is below your 61.8. What happens? Selling pressure has broken that zone. So I won't wait to buy again. What I'll just do, if it went a little bit lower, I could just set a sell limit around there, or wait for it to pull back in front of me right there. Once it pulls back, what do? I join the sellers immediately, and I will sell to 100%. At that 100%, I will exit. I will now let market decide whether it wants to break that 100%. When it breaks the 100%, that's when we have a full reversal. It's like saying, this is the analogy. Market goes all the way up. It makes buy move up, right? And for some reason, sellers now came and swallowed the same market to 100%. What does that mean? It's like saying it swallowed the whole 100% move of the buyers. So it's like saying sellers are so strong. They've taken over the market. That is what it means, is it not? So that's one trick I use in Fibonacci. Maybe I've dragged my Fibonacci in this uptrend. I was waiting to join at 61.8. When I see selling pressure closing below that 61.8, I'm no longer looking for a buy. Instantly, I'll join the sellers. And then, since I've dragged out my Fibonacci, I'll see the zone where 100% stops. That's where my TP will be. So I'll quickly exit at that 100%. So that once it gets to 100%, I now want to see, is the market going to break that next zone? Remember what I taught you in trend reversals? It's not enough for market to break a zone and close outside of trend. You want to see if it's also going to break the next zone. In that case, we'll now have a full reversal. So it's like saying that next zone you're waiting for it to break is now that 100%. If it breaks that 100% below, that is when your full reversal is now complete. Do you understand? So that's how to trade in an uptrend, 61.8. If market closes above, you buy. But once the candle closes below 61.8, change your position immediately. You to join the sellers and sell to 100. So if you understand that explanation, can you please drop a 7 on the chat box? Can you please drop a 7 on the chat box if you understand that explanation? Drop a 7 on the chat box if you understand the explanation. Okay. Benedicta not Diana says she's not understand. Okay. So that's one trick on 61.8 and the 38. So I just gave you two things I want you to take home here. The 38.2, anytime the market gets there, would always give you an impression. It's always a zone, just most like before you get to 61.8. You would think that's the best buy zone, and the market will start buying, doing a continuation. Note, it's always a false one, especially if you are using Fibonacci on H4, right? That's 8.2 zone is not the best. Always wait for 61.8. Right? So even if you want to quickly join that 8 point zone, just don't take more than 20, 30 pips, get out, right? Because it's just like a fake out. That's not where the market is going. So it's just deceiving you before it heads in the final direction. So 61.8 is the best zone. And anytime market closes below 61.8 in an uptrend, know that you are going to have a short, I'm not going to call it reversal. It's going to sell down to 100%. So get out at 100%. Now wait for the market to do its thing. If the market now breaks 100%, then you no longer have an uptrend. You have a complete reversal of a downtrend. You can now remark and look for the sell areas to join. So if you got that, please put a 9 on the chat box once again. Put a 9 if you got that point. Okay, so now let's look at it from a downtrend. The different areas now in a downtrend is to just be like what's an opposite. So right, the different Fibonacci levels in a downtrend and how to treat them. The different Fibonacci levels in a downtrend and how to trade them. If you notice, I'm not mentioning this 23 zone. I think we mentioned it in our note last time, because the most obvious important ones are the three that I mentioned, and those are the 61.8, right? The 50% and the 38.2. Those ones are the most effective. So if you've written out submitting the different Fibonacci levels in a downtrend, how to trade it. So also right, markets would engage on a short sell around the 38.2 zone. Market would engage in a short sell around the 38.2 zone in the downtrend. Comma. But it doesn't mean the impulsive move has fully started. It doesn't mean the impulsive move has fully started. And most often, it fakes. It leads to a fake out. Most often, it leads to a fake out. Are we all together? Are we all together?
Yes.
So, right, if at all you must join the cell at 38.2, if at all you must join the cell at 38.2, comma, let it be when you are using Fib on a bigger time frame. Let it be when you are using Fib on a bigger time frame, like the weekly. In fact, I don't even recommend the daily self, like the weekly. Full stop. Are we other? So let me explain. Now, in a downtrend, even though we have both buys and sell, what's the impulsive move of a downtrend? Anybody? Like,
Sell.
what's the impulsive move of a downtrend? Sell. Good.
Right.
Meaning that you remember I told you last, don't drag out Fibonacci until the market is pulling back. Meaning that in that downtrend, the market must have started buying. So you are now waiting around the zone to join the sell. Now, when the market start buying, it will suddenly get to a small zone, which is where you have your 38.2, and then suddenly continue selling. Most people will think, oh, that pullback is over. The market wants to continue the impulsive move. They'll quickly rush and join the sell. In fact, most often it will even give you a confirmation candle around that 33.2 zone. That could even be what's it called? You could be looking at a bullish pin bar or Twitter bottom, any confirmation candle that tells you sell, right? Sorry, bearish pin bar. But because, oh, please have me mute your mic. Thank you. So because you're looking at the 38.2 zone and then the market gets there and suddenly starts selling, you think the impulsive move have taken over. Don't be deceived. That move will not last. You just discover that right after you start selling, probably one candle sold, another candle, all of a sudden, when you're still riding, the market can decide to reverse. That's why we always say it's like a false breakout. It will catch you unawares. So even if at all you have to join a 38.2 zone, let it be like on a bigger time frame, not on like 4 hours, because those ones they will fail faster. Do you get? They can be very deceptive. So that's how 38.2 react. The market will react certainly, but is it the best zone? Remember, when you sell, what are you looking to do? You want to sell at the high price. So meaning there's still going to be another zone above it. And that's going to be better than the lower zone around 38.2. Are we still together?
Yes.
Good. So now, right, for 50%, if you get a sell entry around 50%, especially on normal currencies, it's not a bad area for an entry. It's not a bad zone to join the impulsive move. It's not a bad zone to join the impulsive move and sell. Full stop. It's not a bad area to join the impulsive move and sell. Sometimes market might not get to 61.8 and come in between, write it. Sometimes market might not get to 61.8, but might get in between the 50 Fib level and the 61.8 zone. $61.8 zone, come on. It's still a good area to join the impulsive move. First up. Are we all there?
Yeah.
Okay. So now let's go to the 61.8. When the market closes below the 61.8 level or gives a confirmation candle, or gives a confirmation candle for a sell that closes below the 61.8, comma, it can be regarded as a strong zone or area to join the sell. It can be regarded as a strong zone or area to join the sell move. It can be regarded as a strong area or zone to join the sell move. Strong area or zone to join the sell move. Full stop. However, now this is very important, so you can put notes. However, if the candle closes above the 61.8, if a buy candle closes above the 61.8 level and breaks the zone, comma, and breaks the zone, comma, exits the sell and join the buy instead to 100% Fibonacci level. Exit the sell and join to 100% Fibonacci level. Full stop. So let me explain that. We are looking at, let's say this was 61.8 level, just for explanation. Look at a 61.8 level here. We wanted to do what? We wanted to sell, is it not? Now, for you to sell or wait to sell, what it means is market must have been pulling back down into that area. I mean, you must have been buying. You have been waiting to sell around here, remember? So when the market buys, if he buys and gets here, remember this must have now been a resistance zone. Market needs to close below that resistance zone for you to sell. Meaning, if the buyers push the price into this zone and then a sell confirmation candle comes out right on that zone, as in below it, and tells you sell, probably you saw a bearish engulfing pattern, a tweezer top, a bearish twin band hammer, right? Which other one do you have? A double top that tells you sell. Then what it means is that impulsive move, that trend wants to continue, you sell. But all of a sudden, if buyers got into this zone and instead of sellers taking over, buyers were very strong and they closed below your zone. It's simple. It's like similar to breaking out of your trend. Remember, when a candle closes out of the trend, what it shows is the existing trend is losing strength. So if that happens and they close below your zone, just forget about that buying. Don't force it. Quickly forget about the selling. Quickly join the buyers because now buyers are broken through your resistance. Remember, so when buyers break the resistance, it becomes a support signal. So you quickly join the buy. In fact, most likely when it breaks, the market will quickly come back to that same 61.8. So you can quickly just wait there. When it gets there, join the buyback, push it up until it gets to 100%. It's like saying this is no longer a pullback, it's now a reversal. Something that did not stop at 50%. It did not stop at 61.8. It went a full 100%. It's like saying buyers have swallowed the full 100% of the sell move that happened before. So at that point, you join the buyers from that 61.8 and buy till 100%. Now your TP will be at 100%. You exit that 100% immediately. Now watch out to see if market will now break that zone at 100%. If it breaks it, then you now have a confirmed full reversal. Do we understand, ladies and gentlemen?
Yes.
Good. So I'm not going to show anybody on this call how to drop Fibonacci again. The last one, I sent you people video, nobody did the assignment. So I'm going to give you that assignment again. Go back, watch that video, drag Fibonacci and send to me. That way I will know whether you are wrong and we'll be able to correct you. Do you understand? So once you do the assignment, I will take you seriously. And if you don't do the assignment, we'll both smile at each other and I'll still get paid. Any questions so far on what you've learned today? Any question?
Okay, coach. On
Okay.
Fibonacci, you say when it breaks the zone, immediately it breaks the zone, we should just forget about that trend and join the buy. Let me
The
just use this
opposite.
example. Yeah,
Yes.
but when the are you trying to say that the difference between this and trading the trending market is for the trending market now we have to wait for a confirmation candle, sorry, for the retest of that zone before we join.
This zone too was the retest now. I mentioned, I said when it breaks, like for
Okay.
instance, look at the diagram. I said when it breaks, wait for it to come back to that 61.8. That's the
Okay.
request we're waiting for. Do you get? And I was like, wait for
Yeah.
it to come to 61.8 and join. So maybe it broke that zone, it retested, and then you joined. It's still the same
Okay.
thing. In fact, this thing is me indirectly telling you that when your trend is broken, most times when your candle is outside of your trend, maybe it ranged out, you most likely see a support zone that will say, okay, we're going to buy to the next resistance. Now, when he now breaks that next resistance, that's when our trend is confirmed. That's the same thing. That's what that 100% level represents. Like if it goes back 100%, it's like saying that market has completely reversed. Do you understand now? So I hope I answered your question. Well, any other
Yes, coach.
question? The truth is, when you practice this Fibonacci, you will have questions. But until you practice it, it will just be like theory. But this concept is one of the best that will help you confirm your entries well. Like your entries will be precise, and then it saves you a lot of headache. Because if you were waiting to buy, like what happened on gold, GBP, USD, we all had an uptrend, right, on that daily. And last week it broke. If you were waiting around that 61.8 and you were waiting for confirmation candle, you would have seen that sell candle closed below 61.8 in an uptrend. And from what I taught you today, immediately a pullback candle closes below in an uptrend, you know that market is not buying anytime soon. You would have joined the sell immediately to 100%, which it did that 100% that same day. So it would have saved anybody the risk of jumping in to buy only for them to get it out. As long as you always wait for confirmation candle, you can always avoid some of those pitfalls. except you are the one that is aggressive and just join inside the zone. So, okay, in the absence of no question from next class, we'll start from patterns. After patterns, I think we'll round up this set. We're almost done. So Fibonacci was the other one. From next Thursday, don't miss patterns. Don't is also important. There are continuation patterns that let you know the market is going to still continue in the trend, and there are reversal patterns that also let you know ahead that this market might likely be reversing. Like on GBP USD last week, we started creating that pattern. There's a pattern called the double top. It was there on GBP. It was there for anybody to have seen the red flags even before that trend got broken, right? So please try not to miss it. So thank you. See you on Thursday. Have an amazing evening. The assignment again, go and drag Fibonacci. Even if you're wrong, bring it. I'll correct you. You get better and you understand it. Have an amazing evening, everyone.
Bye, coach.
Bye, man.